Concave. Investing on autopilot. Basically, Concave is a decentralized hedge fund where you invest in the Concave token that gets added to the treasury, and then the treasury earns yield through investments and their products. So here's the problem. You are a new investor. You want to invest in what I'm investing in because I'm doing my research. But that's because you don't have the time to do that. And I don't want that responsibility. So I also want someone who can fully dedicate their time to earning yield, researching new trends, and what could be the next potential 100x coin. So with all of that in mind, it makes sense to have a hedge fund dedicated to decentralized finance, and that is what Concave is building. So with Concave, they generate revenue for token holders through their products and active treasury management. This could be from early seed investing, venture-style investments in pre-launch protocols, and strategic investments in post-launch protocols. Basically, they're investing in things that are going to generate more revenue for token holders. Of course, DeFi is dangerous. None of this is financial advice. Please do your own research and form your own opinions before making an investment. I am personally invested in Concave, but it might not be right for you. I don't know if you can take that risk. I am doing this because I like what they're doing. I've seen their community, their partnerships, their AMAs, their documentation, and for me, it's enough to take a risk. So with that in mind, we can get started learning about how Concave works, and if you want to hit that like button, I would appreciate it, and stick around for the full video if you actually want to understand how this works versus just YOLOing or just writing this off. It really helps to understand everything, so yeah, join me for this ride. Getting started with Concave. So with Concave, it's pretty easy to invest. You get the CNV tokens, and if you want to earn yield on that, you stake it. And staking could have several different levels on how much you earn based on how long you lock the tokens. And that is a very different process from typical staking because there are certain tiers of how long you want to stake it available through Concave. Now, if you are going to buy the Concave token, that is available at the Concave exchange. The Concave exchange is owned by Concave. They have the protocol-owned liquidity. That means they own the liquidity, they earn any fees that happen from that trading platform. So every time you trade, there is a 0.25% fee. Compared with Uniswap, that is a 0.30% fee, so that's like 20% off. And since this is protocol-owned liquidity, all those fees go to Concave, and if you are a Concave token holder, those rewards are also coming back to you. So that's just one of the products Concave has, and they also have something called smart bonding. This allows you to buy the CNV token at a discount. Now, I didn't really understand how bonding worked at first, because I was like, bonding, what does that mean? Bonding is basically like in traditional finance where a company issues more stock. They issue more stock at a discounted rate because they want people to buy it, and when the company gets those funds, they use that to generate more revenue. If they generate more revenue, that brings value to the entire stock itself. And with Concave, they do smart bonding, so anytime new tokens are issued, a portion of those go to people staking rewards. So that's why we see people that are staking their position for at least 360 days, they see no dilution. So for example, you are holding 1% of the token supply, new tokens are issued, you get a cut of those new tokens, you still hold 1% of that token supply. You have more tokens, but your position, the amount you're holding percentage-wise of the entire circulating supply, stays the same. Now that is different if you are holding a staked position for 45, 90, or 180 days. Concave rewards people that are staking long-term, because if you're staking long-term, the treasury has access to more funds that they can use for longer term investments. Concave, staking as NFTs. So let's say you did stake your Concave tokens and you locked it up for 360 days. For most crypto platforms, if you stake your coins, they get locked and you don't have any access to them until they fully unlock. This might be a week, this might be 4 weeks, it all depends on the blockchain. But with Concave, your locked stake is represented as an NFT. So if I am locking 100 tokens for 360 days, I get an NFT that represents that. Because with an NFT, my locked position becomes something I can sell in case I need access to my funds. That gives me liquidity on want a locked stake position, Concave is creating a marketplace for people to trade those NFT positions as well. So for example, let's say I got in very early and I'm holding 1% of the entire token supply. I then stake that to Concave and now have an NFT. That NFT represents my position and it is getting rewards as bonding events happen and new coins are introduced into the system. So if Concave is doing very well, protocols and other people are bonding a lot of tokens, that means my locked position is going to be more valuable. I would be able to sell my NFT position for more than its current value. On the other side of things, if Concave isn't doing so well and I just need my funds immediately, I would be able to sell my locked position as an NFT below the market price. I mean, pretty much whatever I want to do. So why do all of this? Why jump through these hoops? Because having these locked positions creates stability in the treasury for consistent investing. This creates stability in the token price as well. This also makes it easier for long-term investors to earn more while still having liquidity. How will Concave earn income? This is very important because if we are holding the token, you want that to have more value. Now, Concave will earn income for token holders through their products and through their treasury management. Here's a very clear chart that will look like a foreign language to most people. Treasury management that can be broken down into these three parts: investment research, delta neutral, and stable farm. This is how the Concave team determines where to earn yield on the treasury. Starting with investment research, this creates opportunities that regular investors typically don't see because Concave will have access to them. Early seed investments, venture style investments pre-launch, and strategic investments in post-launch projects. Delta neutral is a strategy of taking very little risk while generating yield. So it might be a position where you're earning interest for going both long and short on the same asset. It's delta neutral because the long and short cancels each other out while you are there collecting interest. Stable farm. This is where Concave earns yield from stable coins. Concave has partnered with Coindix, I think that's how you say it, and that's to aggregate, optimize, and auto-compound yield from stablecoin assets. Concave products. Concave also earns a yield on their products and services. At the moment, Concave Exchange is available and the NFT marketplace will be up soon. Concave also does treasury management as a service. They earn yield for other protocols. Now, Concave Exchange, I went over that earlier. Pretty much if you want to buy the CNV token, that's where you go. Typically, people would trade on Uniswap. That has a fee of 0.3%. Concave is going to have all the liquidity with a lower fee of 0.25%, so 20% cheaper, and if you are trading there and paying those trading fees, that becomes income that goes towards Concave holders. Now, as the other products and services develop, we can cover that in a future video. Partnerships. Concave is for retail investors like you and me, but it's also for other protocols that want to earn yield on the assets that they have available. Because if you're a protocol, a crypto project with a large treasury that isn't earning yield, you're not getting full value. That's why Concave partners with other protocols to either manage their treasury or to help earn additional yield for them. These are the protocols currently partnering with Concave, Frax, Inverse, Premia, Redacted Cartel, and Tokamak. Community. What's interesting about Concave is that they have a very large community before even launching. So their Discord and Twitter each had over 35,000 members or followers prior to launching, and that's because people are very excited about the product, what they're doing, and their partnerships. And another thing that I like is Concave Town. This is something they built within the program Gather Town. It works a lot like an RPG video game. You go around there, you can communicate with other people, you can hold events, and I highly recommend checking that out. So here's what we know. Concave is a collection of products and services that are used to get you a return on your investment. To begin, you need CNV tokens that you could stake if you want to lock in more rewards. The staking, business model, documentation, partnerships, and community have all been established and very well detailed. Then we have to talk about the risks. So the team is anonymous, which can always be risky when it comes to crypto. The project is still in its very early stages and doesn't have a proven track record, and I'm an investor. that's a big risk there because I don't know what I'm doing, and that's a risk. So I just want to have everything clear out there that, hey, I do have a part in this, but I want to see what happens with this project. So don't invest, just watch it, and if you're comfortable taking that risk, you can make an investment. This is not financial advice. I just want to explain what they're doing, my current partnership with them, and I want you to come to a decision that, hey, is this worth the risk, and what kind of investment am I really making? So that's all out there. I really want to disclose that. I don't want to be responsible for people making money or losing money. I just want you to be educated. With all that considered, I like what they are doing. Being able to have a team of people find investments and earn yield for you sounds awesome, especially if they can be seed investors in projects with a lot of potential. This would allow more people to have the same opportunities as VCs. So for example, the seed funding for Solana was 4 cents per coin. 4 cents per coin. That's the investing access I would like to have. And as you know, Solana is not 4 cents. Each Solana coin is worth over $135 at the moment. But let's not be completely blinded by the opportunity, as there are risks involved. So with that, please hit that like button, consider subscribing, check out the links in the description, join the Discord, and with that, I hope you got your full value for today.